So why are we changing from area auditing to modern auditing? Let me delete this part because that was the main title of the lesson. Factors that have contributed to changes in auditing. One thing that is very obvious is that in area auditing, the companies were very small. Today, the companies have grown in size. And because of that, the work of an auditor has to change. Maybe the auditor does not have to audit everything. Today, he has to audit maybe few transactions. That is called the changes in the size of the company. So the companies of today are multinationals. The companies of yesterday were sole traders or maybe small companies. That has contributed to the change in auditing. Changes and advancement in ICT. Changes and advancement. Advancement in information and communication technology. If you go back 100 years, you'll find that most of the companies never used ICT. Perhaps it was not maybe discovered by then. Even if it was there, but it had not been discovered, but we say most of the company could not maybe be able to use them. Today, most of the companies are using them, and the use of ICT is changing the approach which auditor is going to be using in auditing a company. You have something called the laws and regulations, and we can say the changes in laws and regulations. A good example here is when you talk about the auditor's liability. We say previously the auditor's liability was limited to contract. Today, the auditor's liability is open. You can be sued for criminal, civil under tort, civil under contract. That is because of the laws that have changed over the years. Something else that have changed over the years and has contributed to the changes in auditing is the changes in the number of companies. So if you compare the companies of today and the companies of maybe yesteryear, or look at the population upsurge. You compare maybe perhaps a country like Kenya or East Africa 20 years ago. Maybe the population was not more than maybe 150 million. Today the population in each and every country maybe is about over 40 million. And so we have so many of us. Because of that, again, we can also talk about persons in terms of companies. Companies maybe 60 years ago or 50 years ago are very few. Today they are very, very many. And that has contributed to the changes in auditing because we have to fulfill or to satisfy all those companies at the end of the year. Those are 4 points, but we can add maybe more points. Point number 5, we can say there has had changes in accounting and auditing standards. Auditing standards. Every time we introduce a new accounting standard, we give an auditor a new responsibility to check compliance. Every time we introduce a new auditing standards, we give an auditor a responsibility to go ahead and check to be guided by that particular standard. This one is a guideline to the auditor to change his audit approach. This one is a responsibility to check whether the financial statements have been prepared in accordance with the new accounting standard. The other point that we can talk about here, number 6, is something we call globalization. In most cases, we say the integration of companies and what we refer to as maybe the mergers and growth of companies and companies operating beyond their original countries or maybe their home country has introduced so many differences and so many changes that require the changes of the audit. So even the globalization, the integration of the companies, as well as maybe companies operating in different countries. For example, you check a company like Barclays, 100 years ago, maybe it was operating in London alone. Today it's operating all over the world. And so that we can be able to satisfy maybe the users' maybe requirements, we need to go ahead maybe and ensure we change the audit approach. Then there is something we refer here as changes in corporate governance. Corporate governance. The change in corporate governance means we are changing the manner in which we run a company, the manner in which we run the company. Previously, the manager was also the owner of the company. Today, we have separation. We have what we refer to as separation of ownership and control. The person who is managing the company today is different from the person who is owning the shares in that company. For that reason, now, today we have to report to the shareholders and not to the management that we are going to be investigating. That has also contributed to the changes in auditing, that is the changes in how we manage the companies of today. Number 8, we have something we call investors' awareness. Investors' awareness. Today, most of the investors can tell if they sue an auditor how much they are going to get back. Today, the investors can tell you what is international accounting standards. They can tell you what is international standards on auditing. All this is putting more pressure to who? To the auditor, so that he can be able to come up with quality audit work. If an auditor cannot introduce quality audit work to satisfy the investors, then he is going to face so many liabilities and risk. And that's the reason why the auditor is changing, to make sure that the auditor meets the pressure given by the investors or to provide quality services. The investors' awareness has put more pressure to the auditor. We can also put a point here, number 9, and we can say there has also been the professional body. The professional body. So 100 years ago, we never had Institute of Certified Public Accountants of Kenya. We never had American Institute of Certified Public Accountants. We never had Malaysian Institute of Certified Public Accountants. We never had Hong Kong Institute of Certified Public Accountants. We never had ACCA. So these were introduced so that they can guide accountants and auditors. And these ones have changed the work of an auditor. The last point is what we refer to as corporate scandals and company collapse. Corporate scandals. Every time we have a corporate scandal, like a major fraud, the first person to be maybe named in that scandal will be the management. The second person will be the auditor. So that we can stop being blamed on corporate scandals, then we have to change our responsibilities in auditing. If a company collapses and then we are blamed, then we have to go back and reorganize our services as auditors. Because most people are viewing us as people who cannot provide quality services and charging a very high cost maybe for that services that we are not providing. We are not providing quality maybe for our work. And that has maybe made our audit work become scandalous as well. So this one has tainted the image of audit and has affected us, and so we have to change the audit approach. So we have about 10 points that we have to check which have contributed to the changes. Changes in the sizes of the companies today, they are big in size. Changes in and the advancement of the ICT, that you know, even we have Wi-Fi today. We never used to have it some years ago. Changes in laws and regulations, we have a new Companies Act. Changes in the number of companies. Today, the number of companies are in millions compared maybe to thousands of companies some years ago. Changes in the accounting and auditing standards. Those are new guidelines that are governing audit. Globalization, that is integration of companies. Then we have changes in corporate governance, the way we run the companies. Then we have today's investors' understanding of the system. Then we have professional body, which have emerged to monitor the work of an accountant, as well as the corporate scandals arising and which have been affecting the work of an auditor.